Traders, the structure in front of us is a clear trading range. Price is for the most part swinging up and down, up and down, up and down. The exponential moving average, this blue line, this 21 bar EMA is being flat. And when we're looking at structure like this, our goal is to identify the support and identify the resistance. Our goal is to identify these key levels because we want to know where the price is breaking above or below these important key levels. Because according to price action rules and according to trading range behavior, most breakouts of trading ranges will fail. That is something that is not being taught in general public, but this is why 90% traders are failing. They are taught to be buying or selling the breakouts. There is a strong momentum, but as you guys can see, most breakouts, at least temporarily, out of trading ranges will fail and you want to fade them. We had a breakout to the downside below the important key level, and look what happened. Price quickly snapped back into trading range. We had a breakout to the upside and price quickly snapped back into trading range. We had a breakout to the downside and we quickly snapped back into trading range. Now we can see that price eventually broke below the support and breakout was successful. But there's actually a clue in price action that we can recognize that this breakout is going to be a successful. And we call that an imbalance. And more specifically in this example, we're going to call it a bearish imbalance. And take a look what is happening. When we take a look at the trading range right here, this trading range looks pretty healthy. And a healthy trading range means that it is oscillating between the key levels up and down, and the trading range is being filled fully. But when we take a look at the right side of the chart right here, we can see that we have a strong downtrend pushing lower and price is hitting the bottom of this trading range. And notice what is happening. Instead of price rallying higher, it reversed back down. Another attempt to rally higher and it fell here. Another attempt to rally higher and it fell here. Another attempt to rally higher and it fell here once again. Every single time price attempts to go from the support all the way up to the resistance, which is how you would expect the healthy trading range to play out, price is failing and price is barely making it to the middle of trading range. And this is what it's called bearish imbalance. And when you see this is unhealthy trading range, and the breakout that will eventually happen has a higher likelihood of succeeding. So once we see a bearish imbalance being formed like this, and we see a price potentially breaking lower, we are no longer interested in fading the breakouts. We just want to let the price break out and adjust to new trends. So notice how there's an empty room at the upper half of the trading range and price is only working in the bottom of this trading range. There's a micro trading range here and as a part of this bigger trading range overall. So this is a bearish imbalance and price is eventually breaking lower. So no fading right here. But when I was watching this live today, this is what I would have. I would have my support at this swing right here. I wouldn't move it all the way down here because this is what I would see. I would only see this right here. This is what I would see. So I only need to find a certain area that will give me at least one swing. And this swing is what I use to identify the key level. And notice at this point on we have a downtrend working lower and price broke below the key level and we were far away from EMA. And EMA acts as a magnet and there is a high likelihood that price will pull back. But at this point on, I don't want to fade the breakout. Why am I not looking for longs? Because the downtrend is in play. And after break of a downtrend, we expect, according to trendline rule, to get a new extreme. So the price is pushing higher right here. This is the first break of this downtrend working lower. So we expect for price to push lower. But at the same time, I cannot sell because I have the micro uptrend working higher. This is a little bit confusing, but it's pretty much simple. You just sit on your hands when you have conflicting beliefs. Because according to trading range rules, you expect for price to go from the bottom back into trading range for the breakout to fail. But notice what happened when I saw price still needing a new extreme for the downtrend. I was just waiting. I wasn't looking for it to go long. I wasn't looking for it to go short because I have two conflicting patterns here. And when I don't know what to do, I just sit on my hand patiently. And notice price created, eventually break, new extreme, perfect price action. This is indicating that this downtrend played out. And now price truly the breakout failed and price pushed back above the EMA, confirming the overall trading range. So now the bias is simple. As I'm watching this and price is creating a new high, I still follow the trendline rule the same way as I did follow it right here. We have a break of a trendline. I expect for price to create new extreme. We have a new high, first entry long, pullback, second entry long. This is a two-legged pullback with the direction of a trend, and two-legged pullback at the key entry point is a high probability setup. This is right spot on at the market open. And also I had my trend line drawn like this. You can make a case for drawing the trend line slightly tighter, for example, like this. But when I'm anticipating a market open, I want to play it safe. So for that reason, I use it just slightly wider like this. So this is a tool like a pullback, but since it is right at the market open where volatility increases a lot, I didn't take this trade right here, and I think it's slightly aggressive because of the short-term downtrend, but not a bad entry by any means. And notice what happened. Price created a break and a new extreme. So once price creates new extreme, there's a time for correction or straight up reversal. And since this is a trading range, notice the usage of my short-term trend lines. I'm solely relying on very tight trend lines. Normally you find the trend lines of the very first few swings, and notice what I can do. I can look for wider patterns like this or like this. However, that is not necessary. I'm just going to focus on the very short 2 months, as they will keep me on the right side of the track. In trading ranges, they are the most reliable. So with new extreme being formed, price created first entry long, pullback, second entry long, failure. Now we know that we don't want to take second entry long. This is a different story here, because this second entry long still is under the right context. The uptrend is new extreme. After new extreme is formed, no longer a second entry is a high probability setup. And this is not a strong trend, this is just a shortened trading range, so no good. If anything, I'm looking for to go short, but this second entry long failure formed above EMA, and it is a doji bar, doji-ish. The body is fairly bearish, but the stimulus at the bottom is visible. So if I want to go short, I need to see reversal pattern, and reversal pattern is characterized by a push below EMA. So I cannot take this sell, even though context-wise uptrend played out, it is still above EMA. When I was watching this, I was anticipated to go short actually on this lower high. We never got triggered because this is the lower high after failed second entry long. You guys saw me taking this trade last Friday. Never triggered. I probably would have shorted below this bar anyway. I was hoping it would be a little bit more better. Price stole a little bit, and now I cannot go short above EMA under such a horrible bar. So you guys can see in this instance, even though you're expecting short, you cannot sell the market. And you guys can see price is working lower. And now what do? We expect the same thing to do as all the way through here. We have a breakout trend line, new extreme form. From that point on, we expect correction or straight up reversal, and market strongly reverse back up. And notice how we're all over the place. So this is clearly a trading range. There's only a first entry short. There is a bearish bar, but there is no trigger below this bearish bar. So this is just a first entry short, and that's not high probability setup. So you cannot gamble. You have to follow the rules if you want to be consistently profitable. And this is not a great entry. So this is a trading range structure. Most breakouts are failing. You cannot be selling the momentum. Just wait. Price action will most likely pull back. And this is a strong bullish rally. So once we have such a strong bullish rally, what do we expect? We expect the same thing that happened right here to happen again. This is almost a repeat pattern. Price is working lower, so I have to redraw my short-term downtrend. We have a new high, first entry long, pullback, second entry long. But this second entry long formed below EMA. EMA is a key entry point, and a second entry long two-legged pullback needs to form at the key entry point. Since it pushed below, this is not a great and a high probability trade per se, so I'm waiting here, I'm being patient. If I'm not sure, I can get a confirmation setup that would be a higher low, and we have a higher low right here. I just don't like the stim at the top. You know what, this can be almost close to marked. And by the way, a note that this is all happening very quickly. This is just a couple of minutes far apart from each other, so when you're watching this live, you really need to make quick decisions, and if the signal bar is just not great, or you hesitate a little bit, you may miss an entry. So it all seems great in hindsight like that, but when you're watching this live, this high low didn't really form perfectly, but this is a high low after two-legged pullback. Uptrend needs to get new extreme, and you have enough room to this swing. So great confirmation setup, and this is the first setup for the day that I took, and this is the perfect high probability setup. New low form, first entry short, second entry short failure, second entry short, two-legged pullback under the wrong context because context is bullish. EMA, key entry point, is holding price, and this is a nice bullish bar, and it's a failed second entry short. Uptrend still needs a new high. So this is a textbook high probability setup. This was so fast. In fact, this was the fastest scalp I probably have taken in my trading career. This was so fast, I didn't even manage to move my runner. My runner is set to 12 or 14 ticks, and I generally move it higher. It was so fast that I just entered, I instantly scalped. I couldn't even react quickly enough to move my runner further up. So this was really fast, and a lot of traders missed it because you had to really be fast on this trade. And I want to quickly talk about the high probability setup. What do we expect? There are a lot of high probability setups marked on the chart, as you guys can see. A lot of two-legged pullbacks under the right context. But this high probability setup and this one are specifically textbook, and they're easy. There are always 2 or 3 high priority setups, the easy one, textbooks one, that you can spot. And the reason why these are so great, because you cannot almost make a case for the opposite side of the trade. Take a look what is happening. The bias is extremely clear. We have a strong uptrend, we have a 2-legged pullback down, and we have a failed second entry short above EMA, and you need new extreme. So this is, you cannot make a case for going short because you need a new extreme, and there is nothing else to think about. This is a simple price action. You don't have a headache. And here we have a push higher, new high, first entry long, pullback, second entry long, 2 legs down, downtrend played out with a break and new low. EMA keeps holding price, and we have a bullish uptrend that after break of a bullish uptrend, we expect new extreme. So these 2 setups were really textbook ones, and they are great that you can't make a case for the sell side. And these are the setups that you want to be focusing on, because there are a lot of setups, they're high probability, but they still require a lot of thought process, and you need to really think it through, because you can make a valid case for this trade not working. But when you're watching this trade, and this trade specifically, the price action is so clear, and if you're following the rules, it really, I mean, there is nothing to think about. You have to take these automatically. Notice what happened. Price pushed higher, didn't create new high, strong push below, lower high, but we don't want to take lower high. This bar is way too big. At this point on, I'm keeping my support here, so I don't want to go short directly into the support. It's very trading range like, so I'm just sitting here patiently. Price created new low, first entry short, pullback, second entry short, failure. Now I didn't take this trade myself. I didn't recognize it. It was too sideways for me. But look what happened. We came from the bottom, failed second entry short, reversal pattern above EMA. Excuse me, not reversal pattern, because this downtrend didn't play out fully. So just a trap, failed second entry short. We don't want to go short above EMA like that. Great bullish bar, quick little failed second entry short, high probability setup. Now, price is right now hovering around EMA, and you got this small little uptrend working hard, but you can't really pull the trigger here because this is too stacked. This bar that is super tempting, indicating momentum, is way too big. Even this bar, and I don't see high probability setup here. You're expecting probably for price to push higher. You still need the new extreme for this initial uptrend, but you just can't bend the rules and can't get too eager, especially when the price is printing so fast. These bars are only one couple minutes apart from each other, so you will get a lot of high probability setup. There is no need to rush any entry. And notice we are working in this trading range right now. You have multiple tops right here, double top, triple top. Now you have a quadruple top. So this is right now a trading range here. So price is pushing higher. There was a news event around this area, new high, first entry long, pullback, second entry long, first break of this uptrend. This would be a decent entry. Unfortunately, you guys can see this is 44 tick bar, cannot be entered, and price high low is horrible, and a failed second entry short. Even though it would have worked for a scalp, you can't go short when it's too stacked directly into the resistance. If anything, you're probably anticipating for price to eventually sell. However, this is not fully just a great short because all this is stacked. So price push lower, you're expecting to get a quick lower high below EMA, confirm the bearish momentum, you never get it. Price just quickly sold off, break, new low form, and at this point on, it's time to move the support a little bit lower. You don't really need to because you can draw this micro support right here. But once you have a break in your extreme, notice how price action is working perfectly. You stop looking for shorts. You have a big bearish bar and you have a new low, first entry short, second entry short. Notice you have a second entry short that worked barely for a scalp, but since the downtrend played out with the break in your extreme, this is not a great high probability entry to take. Now price action is volatile enough, you can make a quick scalp, but notice we are bottoming here, the downtrend played out, and this is not great entry. If anything, I was looking for failed second entry short, and this is the lowest low, and we have a first entry short, strong push above EMA indicating bullish momentum, and there is no second entry short failure. Other traders had failed second entry short, so if you had a failed second entry short trigger here, this is great entry because this is a nice bullish bar. I didn't, unfortunately. I had a failed second entry short all the way up to here, far from EMA, which I cannot take, so I didn't get the entry. But notice how the trading range is playing out. Notice how the shortened trend lines are working, and this is, you're just following that, and it's completely normal to just not take these entries because they're choppy. And notice how price action really works like clockwork. All of these trend lines, once they get new extreme, they correct or reverse. Truly amazing. So you expect after such a strong push, you're going to redraw the shortened trend line. You have a break, first entry long, second entry long, downtrend played out with a break and you low. It's important. Even though this uptrend is right now the bigger pattern than this bearish correction, we still want to know when it is safe to buy, because once the short-term downtrend is in play, a lot of times you can get trapped. So once you have a break of this short-term downtrend and the new extreme form, 2 legs down, now you know it's safe to sell, it's safe to buy, excuse me. EMA keeps holding price, big bullish bar, you expect new high after break, great high probability setup according to rules. It doesn't get any easier. It formed, I think this bar was way too big. That's the reason why I couldn't take it, because yeah, this bar was really big. I was preparing my limit order, no chance to enter. This was really big, and you will be risking a lot on this one. So it didn't even take a couple ticks back, it just really quickly pushed higher. So unfortunately this bar is way too big, but perfect entry context wise. Now let's talk about the wider patterns. When you're watching move up like this, we know that the trading ranges, we are sticking mostly to short-term trend lines. You will be enticed to draw trend lines wider like this. And when I was watching this, I even was tempted to trade like this, but something felt off. Because once you are now above the trading range, you expect for price to break, but more importantly, these wider patterns generally don't work for the second push. It is how our minds are wired. Once we see this big move up, we kind of look for a bigger uptrend. Same thing goes for downtrend. And what I mean by second move, I'm going to take a look at this from a larger scale. We had a failed breakout right here, and we have a big one leg up, correction right here, and we have a kind of second continuation of a move. Same thing down here. We have a one leg down, correction, and the second leg down. And these second legs, they generally will tempt you to make a wider pattern like this, but these are not really what you're supposed to be looking for on these second moves of the trend. You really are supposed to sticking to the short-term ones. So once there is another short-term uptrend, break, new extreme, you're really expecting for price to push lower. However, there is really no great entry. I was still expecting to get a quick second entry long at the EMA, never formed. Everything is far away from EMA. Once we had a new high, first entry long, second entry long, failure. I wanted to go short here, but this is an inside bar of such a horrible bullish bar. Even though it would have worked, I don't really like taking anything here. Then price created a last push up. It looks very similar to this pattern right here. You guys can see we had the short-term uptrend. Let's say, oh, I'm doing a little bit. We have the short-term uptrend. We had the first entry long pullback, second entry long failure. We had that last little push higher, and then price reversed. I was expecting to get a quick felt second entry short here, but we never really broke below the bar on a nice second entry short, so there was no setup, and price continued pushing lower from here. So right now the rules of a trading range are coming into play. Most of these breakouts of trading ranges will fail. There is the new high, first entry long, pullback, second entry long, but this second entry long failure is too far down, far from EMA, and even though it worked here, this is not really the safest entry you want to see. Also, you have a kind of like a first leg down here, pullback, second leg down here, so you are expecting the price is pushing lower. It is just hard to find a proper downtrend. I found this downtrend only after this swing right here. It's very hard to find a proper downtrend. You're focusing on the short-term swings, perhaps something like this. So I don't like any entry right here, and that's just the part of trading. You, just like we talked about, we want to take these easy high probability setups, and once the setup is unclear, the context is unclear. Actually, the context is clear here, just that the setups are not forming correctly. You have to be patient and you have to wait for price to give you a good setup. So as nice of a downtrend this is, unfortunately there is no way to get on board of this downtrend. Price created to push to key entry point, but it is just a first entry horrible bar because it's way too big, cannot be entered, and price kept pushing lower. Notice how if you draw this downtrend of these two swings, it fits very nicely off the bottom, and notice how strongly the price is pushing lower, and notice how far away from EMA you're getting. This is what it's called overshoot. An overshoot a lot of times leads to a break of a trend line or straight up reversal. And when I was watching this overshoot, I'm expecting for price to go from the resistance all the way down here to this support. So even though I knew there's an overshoot, I like taking a chance on this second entry short because the structure looked really bearish. When I tried to enter this trade, I didn't get filled. It moved too quickly. It would have worked for a scalp, but you guys can see how dangerous it is because these overshoots will really mess up the price action. Even though this is a second entry short, overshoot a lot of times leads to a breakout trend, and this is why you have to be careful. Once, I want to quickly talk about this trade right here. Once this second entry short didn't really push lower and we had a big bullish bar rejection, This right here indicated and told me that this overshoot is valid, and I really cannot focus no more on bearish momentum. Because when I was watching this, I thought I can get away with strong bearish momentum, that this overshoot perhaps may not be valid, but you guys can see price action works perfectly. Overshoot will really eventually come into play. So after this second entry short, barely scalped, and then we had a big bullish bar rejection and 3 bullish bars, I was no longer looking for shorts, even though we had this second entry short. If we reset the count here, first entry short, second entry short, I was expecting to get lower high, and same thing right here. I don't want to pick top like that above EMA. I was expecting to get a lower high here, never got the lower high. So for that reason, I didn't really like going short here, because now you expect for price to give you the measured overshoot. So you expect, you guys can see, you really cannot go short here. You can go short here, but I really would prefer lower high. So after such a strong bullish reversal, confirming that this second entry short is not really pushing lower, you cannot take any entry here. And there was a failed second entry long new high, first entry long, second entry long failure. Cannot take that as well, even if the signal bar is better. This big bullish bar confirmed that something is off here and overshoot is coming into play. So now that we have an overshoot, it led to a break of a trend line. According to trend line rules, simple price action, you expect for price to create new extreme. Perfect price action, price moved lower, and then you're at the bottom of this trading range and you have a new extreme. So you don't necessarily want to go short, and you don't want to just pick bottom just yet, because you never know how many pushes lower you're going to make. This is quite a big trading range, so you don't want to be picking bottoms. You just want to wait for price to push above EMA and give you high low or reverse the pattern. So even though we have a little second entry short right here, small uptrend is in play, you're at the very low, so you don't want to keep taking none of these entries. You just want to sit and follow the rules. Now you have a strong spike above EMA and you get a high low here, and I was looking for price to create a failed second entry short, and we kind of get a variation of it. We have a big bearish bar, trigger lower, but we don't have a tick higher. We just have another trigger lower, so it kind of looks like a one leg. For that reason, I didn't really like taking that, even though momentum was great. This trade right here was very tempting. If it was a failed second entry short, this is a no-brainer, high probability setup. But since it's just a higher low, it's quite big, quite close to these highs. Not really greatest entry, but not a bad entry as well. I may just as well mark it, because from the context perspective, this makes sense. First leg to new extreme pullback, second leg strong push above EMA from the range lows, and you don't know that you're going to get bearish imbalance. You expect for price to eventually push higher. You're sticking to the short-term trend lines. You have a break, new extreme, same thing to the bottom, break, new low, perfect price action, strong push above EMA. You can play around and tweak around the support. I was adjusting it as the day went by, because that's normal. Price action will give you more information. The lines may change just a little bit. They are the zones, they are not perfect static lines, so you can move it around a little bit just to have the better idea about the structure. So now you have a strong push above EMA and you got a higher low. Similar pattern to this right here. I was really tempted to take this trade. I was even preparing my limit order. This higher low was great because it didn't tick higher first. It just formed a bearish bar, and as the ticks were forming and counting down, at the very last moment, the bearish bar quickly burst higher and ticked above, which is great. This is what you want to see. When it looks very bearish and it suddenly reverses, I almost took it. This was a mental error. I hesitated, but this is a great higher low, because I was afraid that EMA is a little bit in the middle of these bars. But when you're coming from the lows like that, downtrend played out with the break, new low. This is now a trading range, great entry. And then I took this lower high, and it was a losing trade, because uptrend has a break and a new extreme. You get a new low, first entry short, second entry short, and this is a lower high after second entry short. I forced the entry here a little bit because now the EMA is really flat. We're going sideways. The signal bar is not perfect. It really didn't push below EMA strongly, and this is just goes to show you just hesitate for a moment. You just made a little minor error, because I didn't take this trade right here, and I should have, and this probably it tilted me slightly, so I forced the entry a little bit. And these are all minor thoughts that are going through your mind, but they may cost you a trade, and I paid for my mental error right here, because had I taken this trade right here, there is no way I'm going to take that quickly another setup right here, especially when it's this choppy. So this is why you have to take the trades that are following the rules, because if you miss the trade, you may force next entry. You guys take a look, EMA flat, a lot of bar stacked, not the greatest entry by any means, and price is pushing higher. I'm not really particularly drawing a wider pattern like this. This is such a tight trading range that you really want to focus on these very tight short-term ones. There is pretty much no room for these wider patterns. So as the price is pushing higher, I'm really looking for short opportunities, because we're at the top of the trading range. You guys can see we have failed breakout. This is the setup that I tried to take. I missed because it happened really quickly, but then I took this lower high. This is the lower high, confirmation of this failed breakout, uptrend played out, new extreme form, strong push below EMA confirming the bearish momentum. You're right at the EMA, great high probability setup. Price created a break, new low formed, and is reversing from this point on. Perfect trading range rules. Price pushed higher, still break above the trading range. So we expect for price to eventually pull back into trading range. We had a new high, first entry long, pull back, second entry long, failure. I almost took this trade. This bar is 7.5 points big. Had this bar been much smaller, I probably would have gotten trapped here, but you guys can see if the bar is too big, we cannot take it, but we have a break for this uptrend and we have an attempt for a new extreme. And after that, price eventually pushed back below the resistance, below the EMA. And this is a trading range structure. EMA is flat. We are swinging up and down, up and down. So I'm not really looking to go long. Once again, same thing right here. I'm looking to go short. Strong push below EMA. First entry long, pull back. Second entry long, failure. Great reversal pattern, big bearish bar. And then you get a lower high confirming the failed second entry long. High probability setup. At this point on, as we talked about, we have a bearish imbalance forming. So no surprise that the breakout is eventually pushing lower. We're not looking for price to push back. We're not fading the breakout. Bearish imbalance may eventually work. So at this point on, large downtrend being set up, confirm right here. And we expect after break of a downtrend to get new extreme. Also notice, once you have a bearish imbalance, you can eventually get a downtrend formed. If you use these first two swings, something like this, you can find it off of these two additional swings. So we get 4 swing confirmation. Just copy it, put it at the bottom, and this is now a downtrend bearish structure that is helping you identify the bias. Now notice what is happening. We have a break of a downtrend and we expect new extreme, but this is why we have to respect the shortened trend lines. Price pushed above EMA and this uptrend is in play. As long as this uptrend is in play, I cannot sell. So even though we have a second entry short, no short here. Uptrend is in play and it's above EMA. Price created a break, new extreme. Notice what happened. Price broke, came back, tested again this breakout area. After it got tested, it reversed. So now that you have a small break and a new extreme of the shortened uptrend, you know that you're okay to sell. You know that you're okay to expect new extreme for this downtrend. Overall bias is bearish. New high, first entry long, pull back, second entry long, failure. Close right below EMA, great bearish bar, high probability setup. At this point on, I was done with my trades. Last trade I took was this failed second entry long. After that, we get a lower high after failed second entry long, but it's way too big. Then you have a break and then you low of the shortened downtrend. You got another pushes lower, but you don't really get a good second entry short. You get a new high, first entry long, second entry long, failure, but you're quite close to these lows. Don't really like it. Then price consolidated. You're going short directly into these lows. No really great entry, even though the bias is bearish. Structure is strong bearish, so you're sticking with the bearish bias. We have a push lower, break new low. Price getting new low. First entry short, second entry short. 2-leg pullback to the exponential moving average. Even though we have a small break and new low of this shortened downtrend, the bigger pattern is still bearish structure. You can keep creating new lows of these downtrends or the short-term ones. So that's not really the concern. As long as the bigger pattern is in play, you can take a second entry short right here. And after that, this is the last setup I marked because it got a little bit too late here. Market closed soon. And there was a strong bullish rally that we ended up, but no second entry long on the way up for us to capitalize. Even no great high low that we would like to take or failed second entry short. So there is really not much to capitalize on the way up. But this is the structure for the day. Remember, most breakouts or trading ranges will fail. Study the bearish imbalance. Price will eventually push lower, and study the truly high probability setups. This one and this one, when it's really clear in which direction the market is going. So I'm going to see you guys in the next one.